Good morning, everybody. Hey, welcome to Wednesday, April 24th, as we get ready in the heat of earnings season. A bunch of reports today. We've got some economic news coming out later this week. Friday's going to be a big day because we get the first advanced GDP number. So, hey, we're looking forward to it. Hang tight. Dave will be with us in just a moment.
At 8:39, that's 21 before 9 if you insist upon analog. Time to check in on your money. How is Wall Street treating that IRA and 401k this morning? Well, by a lot of measures, pretty darn good, as a matter of fact. Let's check in downtown. Statler Financial Services, Phillip Statler standing by in downtown Sebring. Phillip, good morning.
Hey, good morning, Dave. Hope you're doing well. I know we're at hump day, and the market had a really great day yesterday.
Yeah, kind of. I was embarrassed when we got on before going on the air. I had a couple of personal crises going on. I didn't get a chance to check all three of the major indices. I was going to make note that the Dow was only 300 points away from its all-time record, but you had a chance to check the other ones, and the Standard & Poor's set a new all-time high yesterday, huh?
Yes, and I did confirm the Nasdaq post record closing highs also. So we had both the Nasdaq and the S&P 500 closed at record numbers yesterday. So the Nasdaq up $8,120. The S&P 500 closed at $2,933. So good days. I mean, even the Dow had a great day yesterday, no doubt. Up 145 points. And I think, if I'm not mistaken, I heard this morning the Dow is 0.5% away from its all-time high.
That would be about right. I was reading the all-time high as being at 26,950 and change. That would put us less than 300 points away from that. And well, heck, I mean, a good day for somebody on the Dow could move it 300 points on a not even monstrously exceptional day, right?
No, you're exactly right. I mean, it's, that price weighted. All you need is a good earnings report to come out, and man, it could pick right up there.
Absolutely. Yesterday morning's earnings reports were generally pretty glowing on balance. And then we added in some housing numbers yesterday. And gosh, it's nice to get a pleasant surprise out of a housing report from the government, right?
Well, it was. After we got off the air yesterday, the new housing sales came out, and they beat by 47,000, which was a good thing there. We didn't talk about it yesterday, but existing home sales had come in the day before that, and they also, well, they didn't beat. They missed by just a tinge. It wasn't a big deal. Probably why we didn't hear much about it.
Yeah, so, well, a tinge of a miss ain't bad, given the fact that we've been seeing such a precipitous declines in the housing industry. It's good to get some good news, isn't it?
It really is. And then I'm looking kind of forward. Today we don't have much on the macro side. I mean, crude inventory comes out sometime either later this morning or early afternoon. The big thing to me that I think we have coming up is Friday.
Yep.
Excited about Friday because we're going to have the advanced number for GDP. That'll kind of give us an idea of what the economists and what people think our growth rate is right now.
GDP, let's see, the report should be, it'll be first look at the first quarter, right?
Exactly. Yes, sir. 8:30.
Okay. I lose track. We get those three readings. I can't remember whether we're on first, second, or third reading, and it's always something that gets revised. But, boy, that's going to matter a lot given all the rumblings we've heard about business slowdowns in the first quarter, isn't it?
It is. It's going to be a big deal to kind of get a good gauge of where we're at.
Absolutely. A little bit of green from what I'm looking at this morning after a kind of red start. A lot of earnings reports coming out. The one that I got the biggest kick out of, and my tongue's in my cheek when I find it amusing, but Boeing's report came out, and I'm kind of getting the feeling after a revenue miss that the reaction from the market is, whew, boy, it could have been worse, right?
Well, that's for sure, given the first quarter disaster they had with the 737 MAX aircraft. But
yeah.
Their earnings did come in line with expectations. Their revenue missed by a little bit, which you would expect with the canceled orders. Here's probably the biggest deal about Boeing is they're pulling their 2019 guidance, which I think is probably smart. And they're suspending their share repurchase program probably for the rest of this year, given the uncertainty of the 737 MAX and what that's going to do to them.
Put those together, I was surprised to see green ink on Boeing pre-trading. I mean, when a company says, we're not even confident enough to buy our own stock, which basically is what it says, that's not generally a good sign for a company, is it?
No, it's usually not. But they're trading up a little over 1% this morning, and I think it may be though that the traders look at that and say, okay, the company's doing what it needs to do, because I don't see it right here in front of me, but somewhere I saw the MAX 737 could be $1 billion deal for them in terms of lost revenue. So that's a pretty substantial number. And so I think they're doing what they can to kind of shore up both their income and balance sheets.
Add to that the 60 Minutes piece that was over the weekend about people leaving metal shavings in the engines. I mean, I would rather think that rationale of relief from the investors rather than dead cat bounce on Boeing's case is too big a company to see in really deep trouble, isn't it?
Well, you would hope not. I memean, they do a lot of things, and so you would hope that they couldn't really fail disastrously. But we've seen it happen in the past.
Yeah. Other reports, getting a whole bunch of interesting junk out today. I know we always watch for Caterpillar, and you and I didn't get a chance to look and see which specifics you had a chance to download yet this morning. My report was that Caterpillar ended up having a positive report, but investors weren't impressed because a lot of it came from tax breaks and changes in the tax law. So folks aren't impressed with Caterpillar.
Well, and I saw that too, and I started digging a little deeper to try to figure out what the deal was, because they beat on earnings per share by 9 cents a share, and their revenue top forecast. So I'm looking at there thinking, okay, Caterpillar should be a big winner today, but they're down 2.5% this morning. So I did dig a little deeper, Dave, and here's kind of what I found is that it wasn't necessarily tax stuff. It was increases in their financing because they were able to charge a higher interest rate because interest rates went up. And they had a couple other good things, but the downside is that their retail was down about $8 million, or I'm sorry, about 8% from a year ago.
By retail, you mean their short lines, lawn tractors, and the like?
No, I think retail in terms of their whole construction industry, the whole big equipment. That section was down about 8%. Their total revenue, though, was up 7% compared to the first quarter last year, and their net income was up 8% compared to the same period. But I think you're right. As you start diving in there, you look at it and say, okay, it came from financing. Higher interest rates were helping them. They probably got a little bit of tax breaks in there somewhere, but it wasn't from their main business line, and I think that's probably what investors and traders are not liking this morning.
I was thinking if it was pure financing, that wouldn't be all bad, but it is ancillary to the main line of the business. And boy, the analysts are just not being nice to companies that even make money, just don't make it the right way, right?
Well, it could be. And the other thing I think people need to realize is that Caterpillar's up 11, almost 12% year to date. So it could be too, hey, I don't like what I'm seeing. Let's take some money off the table, see if it comes down a little bit further, and maybe I'll rebuy it.
Well, that makes some sense. Other companies on earnings season that caught your eye this morning, Phillip?
So, it's a crazy day. We had over 180 something reports come out. Those are probably the two main ones, but I will look at Stanley, Black & Decker. They basically came in line expectations. Revenue did beat forecast, and they adjusted their full year earnings or profits up a little bit. And so they're getting a nice little bump today. They're up almost 4.5% this morning.
They were one on my big winners list that I couldn't explain without it being a report, so I assumed that would be one of the ones you had.
Yep. And then AT&T, they came in and they came in line with expectations. They missed on revenue, but they surprised in the amount of increase they had in wireless customers. and they said that they'd pay off 75% of the debt that they incurred for the Time Warner deal by the end of this year. So I'm thinking that sounds pretty good, but trading's off. They're down a little over 2.5% this morning.
Maybe paying off debt too soon isn't favorable to traders either, huh?
Well, and that could be. Maybe they think you should hang into it a little bit
That
more.
could mean in expectation that interest rates are going to stay low. Use somebody else's money as long as you can. That's an old saw as well, isn't it?
Well, yeah, it is. It is. Want to use everybody's money as long as you can. Hey, I want to go to a big loser today, at least on
Yeah.
the market side. Rhomba, iRobot. The little vacuum cleaner, that runs around your house and is a robot and vacuums.
I've been getting bombed on Facebook by a new alternative brand from a couple of disaffected engineers from Roomba people. Are they actually getting whacked?
Well, I don't know, but they beat on earnings per share by about 18 cents, which was good. Their revenue did fall short and pretty short. They posted sales of about 237 million, and they expected 251 million. So, but they did raise their full year earnings forecast. So I'm looking and thinking, okay, yeah, they missed on one metric, but to get beat up like they're getting beat up today is I must be missing something in the more detailed report. But they're down 15% this morning.
Wow. Yeah, I was going to say, that doesn't sound like a monster disaster report. The one thing I'm seeing on Facebook for some reason, there's an advertising campaign. A couple of disaffected engineers from the iRobot people are now making their own version of the iRobot at about a third the price or less of what the Roombas go for. So maybe it's a worry about key staff defections or something, but that is kind of strange. It's an almost make and still get whacked as bad as that on the stock market. That's a strange event, isn't it?
It is. Now, one thing that could contribute to that, though, I'm looking at the year-to-date increase, and that stock's up almost 56% year-to-date. So it could be that they expected better things based on the increase in the stock value.
About the same thing you were saying about Caterpillar, maybe a little bit of profit taking as well. Exactly. Setting the table for this morning, I was green all day yesterday. Like we said, a couple of new records with the Nasdaq and the S&P. The Dow now within about 300 points of being at a new record. Wouldn't be a bad day today if we just held steady at those records. 45 minutes before we open this morning, Phillip, what do we look like on the futures?
Dave, I'm going to say we're kind of in that, hold steady mode right now. We are flat for all intensive purposes. The Dow's up $15. The S&P 500 is down less than $1. The Nasdaq's down less than $1. And gold and silver are basically pretty flat right now. And crude oil is it's flat too. I mean, it's down a little bit from yesterday's close, but it's $66.27 a barrel.
Anything down on crude oil is perfectly fine with me. Overseas markets, Asia was generally off over investor concerns about the stimulus program in China not moving fast enough for some investors' tastes. Europe, because of that as much as anything, mixed results this morning midway through their trading day. Phillip, somebody want to get some advice on retirement or even more importantly for this week's purpose, get rid of some old business papers. How do I find you on the phone, and what are we doing this week that's important for that disposal process?
Hey, this week we are on Friday. We're having our 8th annual shred day from 10 to 2. That's a little bit different time from when we usually do it, but 10 to 2 Friday. We will be shredding your important documents you need to get rid of. Back behind our office, I tell people the best way to come in is on Franklin Street, and then cut up the parking lot there behind the flea market and come right to the back of our office. We'll have a big truck there. We'll have Dave there with the remote, and it'll be a good time. Hey, to sit down with us, to schedule a visit, give us a call at 382-0037. Follow us online at statlerfinancial.com. Join us, like our page on Facebook at Statler Financial Services, and then join us every weekend for the all-important Statler Financial radio show, noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730.
So darned important we run it twice, right?
That's right. We don't want you to miss it.
Absolutely. And I'm looking forward to Friday. Shredder Day is always a lot of fun. It's always nice meeting your customers, and I know that's a real important part of your year for that purpose as well, right?
That's right, and just it is truly a community service. I mean, we've done it for 8 years. Believe me, there's no profit in it. You know, it's all outflow, but it's something I think is important enough that we do it every year for the community.
Absolutely. I wonder if Nell Hayes is going to be giving golf lessons in addition to her identity theft advice.
Well, you never know. And I don't know. I mean, I know she told me she'd have a group here. I don't know that Nell will actually be here, but I'm hoping she is.
I saw her on Saturday. She's planning on being there. So I'm going to
Very
bring
good.
my driver and ask her for swing tips in between the breaks.
What, were you getting golf lessons on Saturday? Is that what the deal was?
Well, you know, kind of. Well, actually, no, she was playing in the tournament with me on Saturday.
Oh, okay. I see. Gotcha.
Have a good day, my friend. I'll see you tomorrow, all right?
All right. Take care. Hey, everybody. I want to thank you for joining us today. I hope you got something out of today's show. As we close out, I want to remind you again that, you know what, retirement, when you hit to retirement, there is no next time. I mean, it's a one and done. And there's no redos. But there's plenty of obstacles that can make retiring difficult, like low interest rates, ever-changing healthcare landscape, you know, rising healthcare costs, volatile stock markets, changes in tax law. All these things can come to play when it comes to your retirement. So the question is, are you prepared for those obstacles in retirement? If you're not sure, all you have to do is get a copy of our complimentary report, is text the word retirement to 863-285-3815. And the guide's called the 5 retirement planning issues that you're going to face in retirement you need to consider. All you have to do to get your complimentary copy is text the word retirement to 863-285-3815, man. Hope you have a great day. I look forward to seeing you again tomorrow.